grade 12s. Today I'm going to talk you through analysis and interpretation of financial statements. Quite often it's a part of the work that the children doesn't want to answer because they feel it's too difficult, and that's basically just because they don't know their formula. So please, that's the first thing you need to do, is to go and study the formulas. And to help you with that, I've put this page, this worksheet for you on Google Classroom that you can use. I'll refer back to it now, and you will also need your textbook. Now before we start, I just quickly want to bring your attention to page 132. The following guidelines should be followed when commenting on a ratio. The first thing you need to do is, once you have your answer, you compare it to what happened in the previous year, and you must specify the years as well as the answers that you got, or if they gave you, sometimes they give you the information, then you use that figures. Then you also mention if the ratios increased, or the answers, if it increased or decreased from the previous year, and then you reach a conclusion. So with that in mind, let's go to the worksheet. I'm going to work from page 120 in your textbook. It's just two financial, or a complete set of financial statements, to show you where to get the amounts from. Now the worksheet I've put on Google Classroom, I'm not going to discuss the first part, page 1, number 1, 2 and 3. We did this in grade 10 and 11. If you have any questions, you feel free to ask your teacher. But you can use this, you can also add here in the first column questions that you've seen from previous exam papers. It's divided into different categories: profitability, solvency and liquidity. Then there's a financial indicator, and in the last column you can write in the formulas. I'm going to start on the next page, on page 2. Because this is the new formulas when we work with companies. So the first section, or number 4 then, do the shareholders earn a reasonable amount in terms of the investment? So we refer to it as a return on investment formulas, and there's 4 applicable here. The first one, the percentage return on shareholders' equity. I've got a sheet that's already completed, so I'm going to work from this one. You can write in the formulas as we go on. So the first one, percentage return on shareholders' equity. The formula, this is the net profit after tax divided by the average shareholders' equity. In your textbook, I'm quickly going to show you where to find it, page 120. Net profit after tax is from your income statement. The amount right at the bottom, net profit after tax. Then we must divide it by the average shareholders' equity. You will find in the balance sheet average shareholders' equity. Remember, when it says average, it means you must use the previous year's information as well as the current year divided by. So shareholders' equity consists out of share capital and retained income. If we don't give you these amounts, then you must go and add all 4 of them and divide that by 2. Okay. So the answer you will get will be a percentage, and that percentage, what do you do with it, or how do you comment now? So after you've said it increased from the previous year to the next year with these amounts, so please be very specific there. Then you compare this answer with an investment in, for example, a fixed deposit or another investment. I'm going to discuss fixed deposit quickly, because we normally more or less know what's the interest rate on a fixed deposit. It will be around about 8%. So you will compare this answer with investment, for example, in a fixed deposit. Then another formula that the shareholders want to look at is the earnings per share. So the formula for earnings per share is also net profit after tax, the same that we used in the previous one, divided by the number of shares issued. So again, in the income statement, where do we find the amounts? Income statement is the net profit after tax, divided by the number of shares issued. Sometimes they give it to you right in the beginning of the exercise. If not, then you can go to note number 7, ordinary share capital. And right there at the bottom, we want the number of shares issued, not the value. In this case, it's the same, but not always. But we want the number, the 600,000 number of ordinary shares issued. That you will use, and you times that by 100. And look now, this answer will be in cents. Okay, so what does it mean? Shareholders want to know how much profit was made per cent. So let's say, for example, the answer is 80 cents. Then for each share in the business, they made 80 cents profit. And then they want to know, of that 80 cents, how much of that 80 cents were paid out to them in dividends. And that's how we get to the next formula, which is dividends on ordinary shares divided by the number of shares issued. Where do we find the information? This will be both in the balance sheet, dividends on ordinary shares. That we will find in note number 8, the retained income. There's the dividends on ordinary shares. So please take note, it's your interim dividend plus the final declared dividend. So that amount that's in brackets, we will use the 108,000 divided by the number of shares issued. We go back to note number 7, that's 600,000. Now I'm going to explain that quickly by looking at page 143 in your textbook. There you go. So in this case, there you can see they calculated both years, and the comments, earnings per share were up by 18.6 cents, or you can say earnings per share increased from 41.9 cents in 2014 to 60.5 cents in 2015. I would prefer the last one, it's more specific. And the increase is probably because there you can clearly see what happened with the net profit. There was quite an increase in net profit. And then the next one, dividends per share. So of that, I'm just going to take a look at 2015. Of that 60.5 cents, 37.5 cents were paid out to the shareholders. So first, you're also going to compare the 2 years, and I don't like this one, so please go and fix it. Dividends per share went up from 33.3 cents per share in 2014 to 37.5 cents per share in 2015. So they could be very happy, the shareholders, it indicates that the directors have confidence that the growth can be sustained in the company. So they're not holding too much of the profit back. They actually paid more than half of the profit out in dividends. Okay, then the last one in this section back is the net asset value per share. So there we're going to use shareholders' equity divided by the number of shares issued. Now the question that's normally raised here is, can the shareholders be satisfied with the price at which shares are being sold? Or in a test or exam you may get a question where they ask you, will you be happy to sell your share for X amount? And the answer you get, you will compare with that. So let's just quickly take a look at the formula. Shareholders' equity divided by the number of shares issued. Shareholders' equity, you know, it's in the balance sheet, page 120. But be careful now, it's not average. So you are just using this one amount, the shareholders' equity, divided by the number of shares issued. And we go back to note number 7, the 600,000. Okay, so you can also compare this answer. There you can see I wrote with the market value of shares are selling for in the market. So that will also be an indication. So please remember to always show what happened from the previous year to the current year. and then you draw a conclusion and you comment on that. Okay, so this was the second part, the first part of the new ratios.